In this video, guys, we're going to look at Forex scams to avoid. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so Forex scams to avoid. Unfortunately, Forex particularly, trading as well, but Forex in particular has a real grubby kind of undertone to it. There's a lot of scammers out there. There's a lot of nonsense, a lot of horrible stuff that really kind of devalues the whole guys. I know you guys are kind of dedicated to trading, want to become better traders. That's really what this channel about is anyway. And so it just devalues the whole thing. And especially Forex for some reason. I think it's because it's accessible to everybody. It's unregulated, i.e. there's no central exchange. It's regulated in certain, and that's a certain thing, we'll get to that in a moment, but there's no central exchange as such. Someone could just make a Forex price up. So there's plenty of reasons why, but there's also scams out there. We've talked about some of these things before, and I know that some people have got caught up in this kind of stuff, which is sad to hear. But hopefully, if we can get this video out there and other videos as well, people can at least maybe just think twice before they get caught up in this kind of stuff. So, first one, guys, is fake brokers. How does a fake broker work? Well, if you're a proper broker, you are regulated with a specific country. So you might be regulated in the UK, you might be regulated in Cyprus, you might be regulated in all these places. Now there is something to be said about where the regulation and how kind of useful the regulation is to you. Some people have a thing about it's got to be in the right country and stuff. Let's forget that for now. But what the key issue is when you have brokers who have a name that's very similar to a regulated broker. Let's say a good regulated broker is regulated in loads of different countries because they're operating in loads of different countries. They have clients from the UK, they have clients from Europe, they have clients from everywhere, and they are regulated and they're doing the right thing and they're a good broker. You might have another company that sets up with a very similar name, and so it all looks legitimate, a nice website, etc. But they're using the regulation numbers from the other broker, so they're kind of cloning the broker. And so when you do a kind of rough due diligence check, you see, hey, well, I can see them on the FCA register over in the UK. There they are, they're all listed. But if you look closely, you'll find it's a completely different firm. So watch out for that, guys. Even though it appears to be regulated, just make sure that it actually is. Fake brokers, and of course, you're giving them money, just giving anybody your money. You're just wiring them your money. Number two is signal sellers with hidden risk strategies. So signal sellers, listen, I'm not against signals, and we've talked about this before and I got a bit of heat for it and stuff, but I don't think signals are a bad thing, right? I think that there's something to be said about you not learning very much and etc, but put that to one side for now. If someone is saying to you, hey, pay me this amount, fixed amount, and I will tell you the trades that I like. Now, on the face of it, it's like, well, why would you and stuff? But it's a transaction that two people agree to. I don't think that's an issue. As long as they understand what they're getting, and as long as the other person knows what they're paying, then it's a transaction two people agreeing to. If you want to hear what some guy wants to trade or his signals on USD JPY, and you're prepared to pay some money for that, then that's fine. I don't think that's an issue. But and like I said, I don't think it's a great way of learning to trade or improving as a trader. I don't think it's an issue in itself. But what is an issue is when you have signal sellers selling stuff with not only false promises, of course, which is outright fraud, telling you stuff about the returns you're going to get, which is just obviously completely fraudulent. But when they're saying, hey, this is the returns we're getting, which are true, but they're not disclosing the hidden risk in the strategy. We had a massive one ages ago. There was a guy selling call options on natural gas, and of course you're going to make money, out the money call options, make money, until the one day you blow up everything. If we look in the Forex space, the classic one, which I've mentioned before, is someone adding to positions. So they're only disclosing their closed P&L. So they might have a trade, they add to it, goes against them, they're adding. Finally it comes back, they take a bit of profits, they mark it up as a 20 pip profit. The fact they were down 500 pips first, and if it carried on, they might be down 1,000 pips. I have seen signal sellers doing this who have been down 4, 5, 6,000 pips on a trade that's left open, and are proudly saying how well they've done because they've made 500 pips this month. It doesn't make any sense, guys. you have to be careful of that. The hidden risk in a strategy, if you're going to go down the signal seller route, which I'd never advise, I don't think it's a good idea anyway, but if you do, you know, we're all adults here, can understand what you're getting, just understand what the actual strategy is doing, where's the hidden risk in the strategy, what's the risk protection, etc. All right, number 3 is the Ponzi scheme, classical one. Hey, you send me money, I'll send you money back, but it relies on obviously more and more people coming into the scheme. The old Madoff type thing, we know a Ponzi scheme out there. Number 4 is I'll trade for you. This is becoming more and more prevalent. This is a horrible one. You have some guy who comes up and he says, hey, look at me, how well I'm doing. You know, he's sitting in front of his Lambo, he's doing this, he's doing that, he's posting all these screenshots of all this account size, and then people are like really sucked in, like, oh, this guy knows what he's doing, he's making 20 grand a day and he's doing this. And then he says, okay, well, I'll trade for you. Send me a bit of money. So send him a few £100. He makes it look as if he's made double, and then you go, all right, well, if you do that quite well with £200, here's 20 grand. Send the money, and of course you never hear from him again because he blows up, he doesn't have risk management. Maybe he's done all right in a short window of time, or maybe he's just a complete fraud, but then ultimately he blows up and disappears. We had one recently, some guy lost, I think it was 4 million, where he got it in, he was doing Instagram stuff, he was up on there, and he was doing the whole thing, you know, that nonsense about, you know, how good I am, look how much money I'm making, I'm a genius. And it's a big red flag, guys. Listen, trading, we know, is times when you're just killing it. You are just killing it, but the real trader knows that that doesn't always last. You have times when you have dips, you have times you have drawdowns, you have times when you're losing, and it's the recovery from that so you can get back to where you were that makes the trader trade successfully for the long term. Anyway, the point is, guys, watch out for that. Don't send anybody any money ever to trade for you unless you are going with a proper money management firm, a proper hedge fund, and they're not going to be accepting £200 off you, a couple of grand. It's going to be a different ball game, a different league. So don't fall for that one, please. Okay, 5, spreads widening. So this is the broker. Some of the dodgier brokers in the middle of the night might widen the spreads to ping out the stops, narrow them up again. You can't do much about it. They just say it's a liquidity issue. They widen the spreads up. Your stop is in place. The arse gets hit, bang, you're out, and it narrows again. Pretty rare now, but it does still happen with the shadier brokers. If you're a regulated broker, you don't need to do this. You've got money flow coming in and you've got clients trading frequently. You're making your money from the spread and the commissions and the overnight charges and all the legitimate ways that a broker makes money. But there are some out there still who are doing this, so just watch out for that one. Number 6, guys, platform freezing. Again, this is very rare now, but you would have times when if the market was moving fast, platform would just freeze or orders wouldn't go through and you couldn't get in or out of a trade. Now that's super frustrating if you're trying to trade when the market is active. So watch out for that. Soak test the platform. Final thing is 7 is robots. So these trading robots that you plug in, EA or whatever it may be, and it sits there and it makes money for you. Now listen, again, I don't have a problem as much like the signals. If you know what you're getting, you're a big boy, you're a big girl, you understand what you're doing. If you want to do it, then that's fine. The issue is that a lot of these are scams. A lot of these are kind of programmed to look really good based on data. Now listen, guys, I could bring up a chart now and I could say to you, okay, and bearing in mind when I'm doing this in a bull market, if you use a moving average crossover strategy on the Dow, you'd have made however much, right? You and I could easily come up with a system or strategy that worked exceptionally well over the last quarter. Hindsight. But how's it going to perform next quarter? We don't know this. We don't know. It's what risk management is all about. It's what trading is all about. In fact, even today, market's down a little bit. Maybe it wouldn't work so well. So the point is, guys, these robots can be made to look exceptional, and they say, hey, this is what it did last year, blah, 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 blah. But it's just curve fitting, which is very, very simple. It's how does it work after in the out of sample data, as they call it when they're system testing, that's important. So questions to ask if you do go down this route, and again, I never recommend this because you're not going to learn anything. And if you want, again, you want to trust your money with somebody, then go down the professional money manager route or the hedge fund management or whatever it may be. You know, steer clear of this stuff. But if you must, and you want to look at these robots, then you want to find out and say, hey, how has it performed in this? What's the risk management for it? What's this? What's that? And I wouldn't recommend it ever, but that's the way you would go. You'd be very, very careful and cautious about it. And probably if you did that, you'd never invest in or buy one anyway, because there'd never be one that would tick the boxes for you. I'm sure there's some out there that are probably okay. And again, it's the trouble. You've got a few maybe good traders who have got this algorithm. Maybe they're not well funded, but they're good. They've got a great algorithm that works very, very well. They've converted it into a kind of robot, and maybe it's very good managing risk, very good at staying out. It's a very good algo, but there's so much. For every one of those, there's probably 100, 200 just junk ones out there just trying to get your money in. And if you can find that one, then maybe it's great. You know, you're happy to give him some money, give her some money in return for using that, then that seems like a fair exchange to me. But you've got to wade through a lot of junk to get to that. Just be careful, guys. Those are some of the Forex scams to avoid. Take care, keep risk managed. I'll see you next one. Bye-bye.